Okay, hey, Ryan here with Bond Street Mortgage. I have James, and we're going to jump right in with the weekly mortgage update. First, talking about a new construction program, James, that you have.
Hey, Ryan, yes. So this is something that we've discussed at length. The importance of having a construction to permanent type program out there. Again, at least on the national level, a lot of local smaller commercial banks have done a good job filling that void. So it is here. It is a national program, and the beauty of this one is you can leverage up to 90% of that total project cost. And so it can be purchase the land, money for construction, and up to a 90% loan to value, up to the high balance loan limit in your county and state, Fannie Mae. So in the high cost counties, as they call them, like here in Bergen County, New Jersey, that number is $636,100. So I'm excited about it because all of the product so far on the conventional side has been for rehab. This is true ground up construction. So again, just another sign that the market continues to open up, that residential real estate is back. We know we have an inventory problem. I think if you go back probably 4, 5, 6 months ago in our updates, if you remember, we talked about the smart money chasing this, and the inventory will catch up to the demand. And this is a great sign for that. Now, it is primary second home right now, limited to one family, but it's a very good start, and I think if this pilot goes well, we'll see this blossom into investment as well.
Okay, yeah, sorry, my son walked in. Okay. So single family homes only, up to 90% of the project cost, meaning you can go out now, if you're searching for homes and you're a little challenged finding something you like, you can go out now and search for land instead, buy a home plan or meet up with a builder and finance 90% of what the whole project will be worth after. So if you know it's going to be worth $500,000, you can finance $450,000.
That's right.
Yeah. Okay. So so this is a great strategy. Every realtor should know about it. If you're a realtor watching this, you should share this, that this is available with your buyers. If you have buyers who can't find anything, this is the time to go share this, right?
No question. It hasn't been there, or it's been available only to the ultra experienced investor types out there. So like I said, I'm definitely excited about it, and I think it's just the beginning of making this money available again. Construction and permanent financing was always a big part of the market, and of course it got overcooked like every other loan product during the financial crisis. But this is a great sign.
Great. So it's how does it work? Do you get the acquisition cost for the land first, and then you get the construction stuff?
That's right. Yep, absolutely. So you'll do the closing on the land. Part of the process is you're going to get obviously qualified on the full amount. You can set 6, 9, 12-month draw period. Interest only during the draw period, and then it converts to the permanent loan, which right now the permanent financing is going to be based off of the market rate today plus a spread, depending on if you need 6, 9, or 12 months.
Okay, great. All right, so I'm definitely going to share this with some people because this is a really big problem around the country. There's not a lot of inventory, and now the mortgage market, the loan products are kind of coming around to that and accommodating that. So that's what this is. This is your chance to build your own new home if you can't find an old one that suits you.
Yeah, and especially even at the local commercial bank level, they're only going to finance 70% or 60%, of that total project. They want that big 30, 40% down payment. So the fact that this is securitized in the secondary market, they're also affording you that leverage to 90%. That's huge, obviously, when you're talking, $700,000 or $800,000 project that you can. Or 700,000 technically, and you can finance 90% of that in a high cost area. So
great.
It's a great development.
Great. Okay, one other point we were talking about, this is Columbus Day weekend. A lot of people are going to be out checking out open houses and taking advantage of the long weekend. One common thing we see in the industry is a lot of people, when they start their home search, they kind of just go look at open houses, not really thinking they're very ready. But then if they see something they really like, they're not ready.
Happens all the time. You have that initial conversation like, oh yeah, we just want to go see some houses, we're looking, and boom, you show them 3 houses and they fall in love with one of them and they're like, oh, well, now we got to get pre-approved. So I always say, to do the homework up front, get that idea, a pre-qualification, even if it is, hey, submit a short application, we'll do a credit check, we'll talk to you about your income, and really get you, in a range that you can afford. And that way, if you are out there and you want to make an offer, you know that you can do that with confidence. And I think it's very helpful to do up front, no question. And this is, I think, in our industry, the big push for the fourth quarter happens now. This weekend, the Columbus Day weekend, banks are closed Monday. Many people, Wall Street, etc., have the day off. So you do get a large, I think, volume through open houses this weekend. You will see that. And again, historically, the 2 biggest closing months for us, August #1, December #2. Obviously, if you're looking 60 days out, 60 plus days out, that's exactly where we're targeting the end of the year run, and it begins now. So back to school is behind us. We just had Jewish holidays also factor into the quiet time towards the end of the month and of September. Obviously, the country, many parts of the country were on pause with the hurricanes. We saw it definitely in Florida, right? A lot of everything got put on hold and reinspection. So that's kind of working through, and I feel very good about the year-end push. And just to hit on that, interest rates, as we talked about last week, were rising. They continue to rise. Jobs number was obviously a little bit off, out of place today because you had a drop of a considerable amount of jobs, but that was really due. Most of it was in the hotel, hospitality, and service industry. So that was all related pretty much in Florida and Texas to the hurricanes. The positive of the jobs number was wages were up 2.9% year over year. That's a big number. We've been hovering around 2%, and we've been saying, where's the wage growth? Where's the wage growth? Well, we definitely saw it this month, which is a great sign for the economy. And that goes back to my thesis that with increasing rates, we will sustain housing purchases. And I think we will do better going into these next few years because people will have more disposable income. They'll feel better about the economy. And that's going to translate to home buying. Even the employment participation rate was better than anticipated. That means people are coming back and looking for jobs. So those are all healthy signs for the housing market. And I know we were reading that there might have been a pause here, but I just think it's seasonal. And like I said, I feel confident that we'll end the year strong, even with a bit higher rates. The 10-year bond is still at 2.36%. It did push up to 2.4 today. So again, historically, you're still talking about interest rates around 4%. Still super cheap money, 30 years. And I just think it sets us up for a great run.
So now's a good time. Now it remains a really good time to buy, especially if rates are creeping up. So, and like you're saying, if the housing market is going to remain strong for years, you might be seeing the lowest prices you'll see for a long time.
Yeah, I see the positives. I was speaking to one of our underwriters here in-house yesterday, and he said that I just underwrote 4 straight investment deals. Those are the things that I pay attention to, that you see, positive signs. It's not just the first-time home buyer that's driving this market any longer. The investor is back, second homes, the Jersey Shore, 5 years later, is still recovering from Sandy. You still see a lot of activity down there. People have the confidence to go back down the shore and buy that second home. So that's lining up everywhere. I think if you look at all, we talk about your area in St. Pete, how hot that market is and how strong it's been. I was talking to a client buying outside of Asheville, North Carolina, super great market there as well. So, again, residential real estate is back. I think it's back to stay. We'll deal with the cyclical effects of the economy when that starts to happen. But I see, a strong time ahead.
Okay, great. So thanks, James. Again, we'll reiterate where we started here. That new construction program is a great opportunity for your clients or for you if you're looking to build a new home. It's 90%. That's amazing, right?
Yeah.
It's really cool. And then if you know anybody who's looking for houses this weekend, and even if they're just starting to search online, it can be very disappointing to go find a house you really like. Kind of you weren't expecting it. You woke up Sunday morning, you weren't buying a house. Then you go look at the house around the corner. It's open. You love it, but you miss out because there are 4 other buyers ahead of you with pre-approval letters already, and you can't get your ducks in a row in time. So call James and his team here at Bond Street, 201. Can I give your cell?
Absolutely.
Okay, 201-523-0026. If you want to just shoot James a text if you need him, or just go to bondstreetmortgage.com and hit the apply link, and somebody will reply very quickly. Okay,
great.
James.
Thanks, Ryan. Have a great weekend.
Let's do this again because the Giants lost again. Now we've got 0-5 versus 0-4 versus 0-4. I think this is the week.
I hope so.
All right. All right. Have a good one.
Talk to you. Thanks. Bye.